Good evening and welcome to the Earnings Review, your tidbits into company financials and operational insights. Thank you for joining us as we broadcast from Hampton Studios in Harare, Zimbabwe. I'm Ibn Mabunda, yo money man. On the show, we engage top echelon executives to get you up to speed with first-hand information. We also chat with the most competent analysts on the market just to ensure you're finished with relevant and comprehensive market analysis. Tonight, we focus on CFI Holdings, an agro-invested firm that is listed on the Zimbabwe Stock Exchange. Now let's get into some teensy-weensys where the firm is concerned in as far as the recent history as well as the most recent developments. Founded in 1908, CFI Holdings has been in operation in this part of the world for over 100 years. Listed in 1997, the firm has been suspended twice over unresolved operational issues. In the year 2016, CFI Holdings was suspended over issues that had to do with a failure to publish results within the stipulated time frame. In 2018, the firm went on to be suspended where corporate governance issues were concerned. Now let's focus on some of the products that the firm actually produces. The firm has several products that are divided into three categories: the farming, retail, as well as specialized category. On the farming front, the firm produces different cereal products, among them maize as well as soybeans. The firm is also involved in poultry. On the retail front, the group distributes different forms of hardware as well as agricultural products. The firm is also into the specialized category wherein it produces stock feed as well as maize and flour milling. Let's look at the divisions that CFI actually operates through. On the retail front, the firm operates through Farm and City Group, which has over 32 retail outlets spread across Zimbabwe. Through Vetco, the firm provides veterinary services to farmers' livestock. On the farming division, the firm operates through Suncrest as well as Hilbert, which is pretty much a poultry division. On the milling front, the firm operates through Victoria Foods as well as Agri-Foods, which are household brands here in Zimbabwe. And on the properties front, the firm owns a 45% stake in an organization known as the Maitlands Properties firm. Now this concludes the Halaju section of our show. In just a moment, we get into an in-depth analysis of the firm. Now don't go anywhere.
Equity Live presents the complete online interactive presentation solution. Hosting AGMs, media and analyst briefings has never been this simple, efficient and affordable. Communicate globally through a combination of high-definition video and your prepared multimedia presentation from any location of your choice. Interact with your invited participants from all over the world in question and answer sessions and voting sessions in real time on our safe, secure and affordable platform. Contact Equity Live for a free customized demonstration. Equity Live, real-time presentation solutions.
Thank you for staying with us. We are getting into a conversation to discuss the operations of CFI Holdings, and joining me for a conversation where that is concerned, I am joined on set by the Chief Analyst for Equity Access, Respect Gwenzi. Now, talking about performance, this is a company that has performed fairly well over the past 2 years. Just by looking at the financials, you'd realize that their revenue actually increased in inflation-adjusted terms from 453 million Zimbabwean dollars, scaling to 580 million Zimbabwean dollars over the period. And then, of course, their profit just took a narrow dip from 20 million Zimbabwean dollars to 18 million dollars over the respective period. What do we read from their financial performance?
Yes, there's been growth on the top line, as you have rightly noted there. Obviously, it's a function of two things. You've got price adjustments coming in there, but the sales volume performance was not really as firm. So we've got revenue that's growing out of inflation inducement. But when you look at that growth relative to the growth in inflation, as at March, inflation was sitting at almost between 5 and 600. And that growth there is not beyond that figure. So that positive performance, if adjusted for inflation, it would become a bit of a negative performance. Why? Because volumes were really underperforming, especially on the retail side.
Respect, these are actually inflation adjusted figures, eh?
Yes.
So their performance would come in a bit on the fair side. Let's digress to talk about their products as well as their key units. You mentioned corporate governance issues. I would want us to cover that later on in the conversation. But let's talk about their offering from some of their operations, particularly where agri-foods is concerned, as well as their flour milling operations, as well as maize milling operations in that very regard. How important are these to the progression of the firm?
Yes, I think one key aspect that you highlighted there around agri-foods, this is a food processing company. They've obviously been able to recapitalize and using the value chains there, getting produce from some of the farming operations that they have, they've been able to process it. And because of their retail network, which I think as at March was sitting at about 44 outlets, up from the prior period, up from the prior period, I think they've also been able to distribute the produce or the final output from some of the agri-foods processes. So I think it's quite strategic to the company because it feeds into the broader value chain where they do both horizontal integration and also some forward integration there within the value chain. So it's quite strategic because you process what you have put on the ground and you also get to retail it. So I think it's been an important aspect outside of other units that you might have mentioned.
And of course, talking about retail, Farm and City, as well as Vetco. Now, this is a space where you also have other companies playing on in there. We've got several agro-invested firms that are also playing on the retail aspect of business. How important is this very arm or sub-unit of CFI?
Yeah, the competitiveness of the unit stems from the fact that they also run the production themselves. So when you finally get to retail what you're producing, there's a fair chance that you are obviously selling it less because of the because you are producing the product. So I think they get to benefit from that. And it's quite strategic also looking at the aspect of agriculture in the context of the economy. One of the biggest drivers of the economy, and when you look at food demand, it remains very high despite the low disposable income. So I think it's quite strategic, the retail space, but it's also feeding from other sectors along the value chain, the production in terms of the plant, but also the production in terms of the actual farming operations. And so they have a quite competitive offering, but it's about redeeming themselves, recapitalizing those retail outlets and making them competitive enough to their former self. If you remember very well in the 90s, I mean, these used to be some of the competitive retail outlets competing with the
Correct.
likes of your TM, your Spars and so forth. But lately you find traction in food lovers and so forth. These are people who have created a niche around agricultural produce. They buy from farmers and they retail closer to the market. And I think they have gone a step further ahead of CFI. But if you look at the time around which some of these emerging players have come on board, it is around that time which CFI was struggling, failing to recapitalize under judicial management, a lot of squabbles in the boardroom. And so I think they have a fair chance of coming back and redeeming their former glory because they do have got the land, which means they can produce. And once they produce, they can actually distribute to their retail outlets, and they can also push some through their mills or their planting mills at agri-foods for processing, and they can actually even sell some of that to some other retail players.
And in addition to that, you have Suncrest and Hubbard within the farming division, where they are pretty much doing well in as far as poultry is concerned. Can you shed light on that?
Yeah, poultry is big business. If you look at some of the operations that fall under INSCO, some good numbers coming from there. 2018 was a bad year due to a certain flu that affected that business. But then getting into 2019, demand for poultry, obviously it went up. We are looking at chickens, you're also looking at eggs. And so I think they have that competitiveness, and they can possibly reposition once they have fully recapitalized that operation.
Now let's get into the nitty-gritties of the suspensions. I mean, it's been a series of suspensions perhaps over the past half a decade. There have been, of course, issues to do with the delay in the publication of the financials that was on the very initial stages, but now there have been corporate governance issues that have been playing out, some battles playing out at boardroom level. Can you elucidate on that?
Yeah, it's been quite a ride. It's been quite a ride there. When you look at the shareholder structure of the company, you have got Nick Van Hoogstraten, who is represented through his Messina investments through various investment vehicles, as one of the biggest shareholder. In fact, when you consolidate his shareholding in its CFI, it's actually the biggest stake in there. And then you also have NASA there coming on board. They have the second largest shareholding, and you also have ZHL, and you have a number of other ZHL related entities as well, who have got a fair share in there. So what's the big deal here? You find institutions like NASA, they've been trying to fight to have control over the CFI asset over the years. The idea there was that once they get control, they can actually influence recapitalization of the entity. And then you have got Messina under Nick Van Hook, which has always believed that this organization can be transformed through restructuring of assets or restructuring of the organization, and that restructuring entailed even foregoing some of the assets as a way of unlocking value. So against that background, there was this lack of congruence in terms of shareholder guidance or what they wanted with the asset. So if CFI has got one of the biggest asset bases of all the listed companies in Zim, so that value had to be unlocked at some point, and yet you find shareholders who do not have got one vision and one view of how to redeem that asset. In the early 2000s, that used to be one of the top performing counters. It used to be one on the buy ratings of almost every other stockbroker in town in terms of their recommendation. But just getting into dollarization, the company didn't recapitalize or retool, and obviously it became almost a dead asset with a whole lot of these units which are underperforming. But when you look at the underlying value, for example, you've got 284 hectares under Langford Estates, and that's almost $25 million in full value in US dollars. And when you, for example, suppose you dispose of that, you are unlocking 25 million in real USD. If you distribute that fraction, 10 million, you can buy some of the equipment which Delta has at some of their plants. You can actually buy a significant share of Delta's equipment, in which company in this country do have got plant or equipment worth over 10 million. So you can just have a bit of a view in terms of what assets CFI is sitting at. But the idea there has been to say, what kind of reformation do we need at CFI? Do we simply have to pour in new money, or we need to change management? We need to get management which believes that we can dispose of this asset, get money from here, put it in some of the core assets that we remain with. And that has been the contention. So over the past 5 years, there have been some real fights. NASA on one hand trying to muscle out Messina, which is owned by Nick, and they have to coalesce together with the likes of your ZHL and some of those investors who believed in their narrative. But at the end, it's Nick van Hoek who obviously went with the control of the company. But these contentions, like you've rightly noted, suspensions, publications of unauthorized circulars and unauthorized statements, and obviously this has it confused investors. At some point, the company was suspended, but they went on to do some, so there's been a lot of issues at boardroom level, and obviously it also reflects in terms of operating performance. But fortunately, we have seen most of the companies emerge from that period of judicial management. Some of them are now operating profitably, and this is the position where we are today.
Do you think a change in management would be the magic wand that CFI could be looking for?
I think that question could have already been answered by virtue of saying before the current management, there was a management which was there. And that was the management which oversaw the demise of CFI. And so when Nick came in, he put in his guard. You could name them, the current Chibanguza and so forth. And even that the younger chairperson who is manning the ship. I think it's a new breed of young business people who are steering the ship. It remains to be seen how effective their strategy is. But for now, I think operationally they've managed to redeem some of those units out of judicial management, which is a plus. But it's now about operational sustainability. Can you reposition the company? Are you able to pull capital when it's required? And that's where the real problem is, because if you don't get to have if you don't have to get majority of the shareholders approving of a capitalization deal, minus those that would have proposed, then it means you never recapitalize the business. So that remains a key contentious area, and growth is in jeopardy if that is not solved.
Do you think we are going to see a change and a revitalization of the firm perhaps in the next 2 to 3 years?
That revitalization is possible, but we are coming from a background where there's still some open wounds, where you have your big guys in the mold of NASA still feeling that they were possibly shortchanged and that they could still settle scores. So you have a long-standing challenge between some of the competing shareholders in here. So that means that over the short term, you are likely to see a perpetuation of the current status quo where one is sabotaging the other and so forth. But gradually, I think they will both come to terms to realize that they both need each other to push the company forward. The number of shares that divide them, or that's between them, it's really insignificant, the difference between their shareholding. And so obviously they need each other in order to see through some of the future endeavors or some of the things that the company commits to do over the long run. I feel that they need each other, and this is one of the biggest assets that we have on the ZSC. It's important that it's redeemed. It's important that it comes back to life. But if you also noted, around June, they did an extraordinary in EGM, which was tabled for June, which was trying to reverse some of what was done in 2015, where CFI shareholders agreed to sell 80% of Langford to Fidelity for 18 million. And obviously the new management, on the guidance of Nick van Hoek and his Messina Investments, are obviously seeking to reverse that. They're fighting for that at the court of law. I'm sure we have talked to ZHL about this in the past. We've talked to Fidelity about it as well in the past. So there's that contention, there's that uncertainty which hangs on in the air, and it makes it difficult to project the path which this company is going to take going forward.
With this Langford Estates at this point, very quickly as we round up, in which direction are the stakes actually staked at this point?
I think it would be very difficult for CFI to overturn the decision which was taken in 2015 to dispose of the 80% stake. Yes, they will possibly fight, but I also think that the ground may not be as even. I mean, given that, you've got NASA, which obviously represents the generality of workers in Zimbabwe, but also has got ties to the government. And you've got ZHL, which also came into life after, a lot of restructuring around government entities. So I think it's also very difficult to really see a scenario where Messina will likely see through what they intend to do in terms of reversing that 80% sell. But I think Langford is a very strategic asset when you look at the prices of land in Harare and the prospects of additional settlements. I think they really see that there's immense value which is likely to come out of that. And when CFI, when Fidelity acquired this asset in 2015, they were the peak of earning some top dollar in USD form due to sale of stands and some of the estates that they were building new properties. So obviously, CFI is well aware that they could unlock significant value from Langford if they reverse that move.
Respect Kwenzi, the Chief Analyst for Equity Access. Thank you for joining us on the program. Thank you for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our informative website, www.equityaccess.net. Remember to catch us every Tuesday, every Thursday, 7 p.m. Central African time on this very platform. From the Equity Access team and I, Danke and ciao.